You're listening to the Rural Press Club of Queensland's Lunch Series podcast. This month's guest is Lex Greensill, who was born on a sugarcane farm in Bundaberg, but is now a global market leader in the provision of working capital finance and one of Australia's newest and youngest billionaires.
Well, good afternoon, and Kelly, thank you very much for the warm welcome. I'm delighted to have the opportunity to address you this afternoon. Somewhat trepidatious, I have to say, also because I've got Mum and Dad here. But in fact, actually, I guess the reason I am here today is because Dad told the three of us, so my brother Pete, my other brother Andrew, who's up driving an excavator on our farm, because obviously we can't stop, and me, that we weren't. I wasn't smart enough to get back on the farm. Andrew managed to find a way to get back. But I think that actually possibly brings me to a piece of advice. I was asked by a farmer earlier, kind of what advice would I give to a farmer based on what we've learnt, and I would say, the most important thing that every farm should have is its own bank. If, however, you don't have your own bank, you can work with us. So I think the kind of story of our firm, it isn't kind of just a marketing spin that we really are a farming family business at its very heart. And so when I grew up, I experienced the kind of sticky fact that most financiers, certainly those outside the rural sector, don't see, and that is that actually farming is, frankly, one of the worst financed businesses out there. As a working capital proposition, it's terrible. And if you think about our sugar business, it can be up to 3.5 years from the point that we prepare land to when we generate the final piece of income from the crop. That's a terrible business to run. Compare that with a retailer or a factory, it's rubbish. And so that, together with the uncertainty of actually getting paid at all, meant that when I was training to be a solicitor, I worked with the local fruit and vegetable growers organisation, the peak body, which I think is now called GrowCom. It used to be called the Queensland Fruit and Vegetable Growers, to put in place terms of trade to ensure that farmers got a fair deal when they were dealing with the central markets. And that inspired me to say, let's go a step further from the point of saying what's a fair deal and how do we deliver a fair deal to how do we deliver that capital as well. And so having started with that kind of grounding, as it were, I actually invested in a company which actually went bust here in Australia, a company called Aussiecom, back in the late 90s, that tried to do just what Greensill Capital does today. And that is what we now call supply chain finance, albeit it wasn't called that back then. And that started a journey and created an inspiration that led me through doing my MBA in the United Kingdom, and then building a business initially at Morgan Stanley. And then we experienced the financial crisis. And for those of you who kind of didn't notice it, organisations like Morgan Stanley, who were kind of conquering the world, suddenly needed to get small in a very big hurry. And so my team and I, we went to Citibank, and we built a very large franchise there, delivering supply chain finance kind of around the world. And then in 2011, contemporaneous with the birth of my first child, I came back to work after paternity leave and handed in my notice, realising that being a father didn't change my view that I thought I could do it better on my own. And we've built the firm that we have today. So what is it that we do? Look, at its very heart, the way that business works in this country and around the world looks very much like a pyramid from a credit perspective. So at the top of the pyramid, you basically have essentially the highest aggregation of capital, of quality of creditworthiness. And as you move down that pyramid, down that supply chain, access to capital and the cost of that capital continues to get more expensive and less available. And so the business that my team and I have built is built upon that kind of fundamental insight that is actually, given that everything ultimately gets bought by a really, really high quality credit counterparty, what one should be doing is not financing based on kind of real estate and the history, but in fact delivering financing based on the future and looking to the cash flows that will pass through supply chains and financing those because they are both durable and very low risk. And so that fundamental insight and arbitrage that exists, and to use an example, say, of kind of two customers in kind of different parts of the world. So in the United Kingdom, we actually provide this solution to the UK government itself. So if you're a supplier to the National Health Service in the UK, we give you the ability to get paid straight away. So in their case, up to 60 days faster than they would ordinarily be able to get paid, and to have the cost of accessing that capital be the same as the cost that the government has to borrow money. So there literally isn't a company in the United Kingdom that can access money cheaper than the cost to which we deliver it to suppliers in the UK. So in sterling, in pounds sterling, that's a cost of a little under 1% per annum. And there are not many companies that are able to borrow money like that, and to do so using our technology, which means literally there are no pieces of paper to sign. We use it, it's entirely online, very much like if you kind of went on your iTunes account and you accept the terms and conditions without ever reading them. That's what we do. The terms and conditions are somewhat shorter with us. But that's what we do in the UK. Here in Australia, we do the same thing for big corporates here in Australia. To use an example, say someone like Telstra, we enable them to deliver low-cost capital to every supplier that they have in the country. And we do all of this by almost, and I hesitate to use this word in case it's used by the press, but we're almost like a virus. Insofar as what we do is we integrate ourselves so deeply and tightly with our customers that we are getting updated information roughly 4 times every second from our customers, which means that we can see, hear, and feel the beating heart of the supply chains that we support. And when you have your finger on the pulse like that, you can deliver credit more efficiently than anybody else. And so that's what we do on the front end, but the real innovation, in a sense, in our business is actually what we do behind the scenes. Because, and I know there are a number of you here that represent kind of various kind of capital providers, but if you think about the way that the world, certainly the world outside of Australia works, is the pension and insurance world is looking for high-quality, low-risk assets to support an aging community where actually there needs to be a yield and a return, and it isn't necessarily a kind of a sort of something of a gambling den as perhaps I observe in the superannuation industry here in Australia, where investors are looking for safe, stable, long-term cash flows. And so what we do is we take the more than 1 million small companies that we deliver credit to in more than 60 countries. We take those assets and we crunch them down into bonds, which we issue to investors. Those investors are largely kind of pension, insurance, and superannuation-like investors who are looking for safe, stable, low-risk assets to invest in. And so, starting in a kind of funny kind of way, in a bank, where banks are all about kind of using their own balance sheet, you take deposits and you lend money out, we realised that model was actually really quite inefficient. The implementation of Basel III, which has been pretty much fully implemented here in Australia, means that it's actually progressively less efficient for banks to extend credit, particularly to extend credit to small companies. So what we do is, although we own our own bank, We actually only use our bank for a portion of our business, and most of what we do is actually going out to the capital markets, and it's bypassing the banking sector altogether. So in effect, we're arbitraging the banks. And indeed, my prediction of the future is that banks are going to become utility players. They are not going to be the people who deliver specific credit and financial services products in the future, because the winners are going to be the firms that focus very, very tightly on doing one or a handful of things exceptionally well, as opposed to being generalists. And the advantage that firms like mine have is we don't have to have branches everywhere to do what we do. We do business in more than 60 countries. We've only got offices in a dozen. And we're able to serve, more than 1.5 million customers. We're able to serve those customers with only just over 300 staff. We could do that using technology. You couldn't do that in the past. I don't have the overhead of having branches everywhere. And when I talk to the regulator, because we are regulated, we're regulated by APRA here, we're regulated by the BaFin, the German banking regulator, the FCA in the United Kingdom. When we talk to the regulator, we have a very narrow conversation with our regulator because we only do one thing. And so we don't have to have a conversation about kind of a one-size-fits-all conversation with our regulators. So some people occasionally throw stones at us and say the reason these Greensill people have gone from zero to the second biggest in the world at what they do is because they're like a shadow bank. That is, nothing could be further from the truth. We are a bank. We're regulated. Indeed, kind of Pete and I are responsible. I've signed a personal guarantee to the German Deposit Protection Authority for 100% of the deposits of the bank. Trust me, we're regulated, and in fact, it's tougher on us than it is for Aussie banks, I would argue. So we're not a shadow bank, but what we are is we're laser focused, and that laser focus is what enables us to win, and why, in many respects, I fear that one will see traditional banks kind of moving into more and more of a utility function in the future. But I think one of the most interesting things, as I touched on earlier, is this move to securitizing a space that was traditionally handled by banks. And in Europe, where we have our base of operations, we are the single largest issuer of bonds in Europe. So to put that in perspective, during the fourth quarter of last year, we issued on average 50 new issue bonds every business day. Now, when we started, we were informed by the clearing system, so the equivalent of the Australian Stock Exchange in Europe. We were told that it was impossible to do what we've done, and we are today able to buy assets here in Australia in the morning, pay suppliers to the corporates that we support here in Oz, and by the time people are getting out of bed in the UK, we've turned those into bonds. We've packaged them up, we've sold them, and then settled them in the clearing systems. Now, the exciting thing for those of you here, and perhaps this is the time the press want to get their pencils out, is that in fact today we do everything for the whole world in London. The crazy thing, of course, is that we shouldn't be taking kind of capital that we've extended here in Australia and securitizing that in Europe, especially considering we have a near 3 trillion superannuation kind of savings pot here. We should be kind of making use of Aussie capital to deliver that at low cost to Aussie businesses. And so what we're going to be doing is taking our base at the centre of the universe, Bundaberg, and we're going to build a new bond issuing operation here in Australia where we will be issuing for our Asian business from our Bundaberg base to deliver ultra low cost capital using our technology to Aussie and foreign investors. And that, we think, is really going to take the battle to the Australian banks. Now, we're already doing more in supply chain finance than all 4 major Aussie banks combined, but we think we can really kind of mix up the market and challenge the incumbents. As some of you who saw in the Australian this morning would have noticed that we're again using cutting-edge technology in order to be able to deliver credit in the feedlot space, where again, to that point of having that kind of beating heart live information, where we're capturing live information with respect to each head of cattle that's in the feedlot, such that we can extend credit based on the value of that stock, the weight of that stock, the expected sales of that. And so I think the thing that to me is intriguing about the opportunity is that globally there is more than $5 trillion of capital required to support the space that we participate in. That space is ripe for disintermediation. It's nothing like the equity markets. I'm sure you all own shares here. That's a very efficient market. It's got an exchange, everything's cleared, it works properly. When it comes to the delivery of capital for supply chains, the provision of working capital, there is nothing like that in the world. And we see it as our mission to democratize the access of capital from the capital markets, the big end of town, to those who need it, the mums and dads, the battlers. And we think that we can make a really meaningful change to the future. And I think that sits well with Pete and Mum and Dad and I as being part of kind of helping other businesses, other young, small businesses, to get a leg up in the same way that we were able to get a leg up ourselves. And so I have to say that it's a real honour to be back here today to address you all here, and perhaps to share with you that perhaps we're on the very cusp of making history here in Australia with turning Bundaberg into the bond issuance capital of Australia.
You've been listening to the Rural Press Club of Queensland's Lunch Series podcast. To book a ticket to our next event, visit our website at ruralpressclub.com.au. Music supplied by audionautics.com.